Hello, everyone. It is Paul Feldman, president of InsuranceNewsNet, and I am here today with Dan Acker, somebody I've known many years in the industry, has a great story. He is the president and chief marketing officer of Scilac, one of the largest producers of annuities in the country, a relatively new company, but really old foundation. I always like to start off with, how did you get into the industry? Because everybody has a wild ride and how they've gotten in this space.
Yeah, generally it's not something, unless you're an actuary, maybe that you intend to, an industry you intend to get into. Honestly, I was going to school at the University of Utah, finishing my bachelor's degree. And in 1998, I needed a job to pay for school. I was going to school full time, working full time. And there was a company that was advertising up at the University of Utah named Educators Mutual. So I joined the company in August of 98 as a billing clerk. So I worked there up until 2005. So started out as a billing clerk, and when I left in 2005, I was assistant vice president of finance because I was given an opportunity to be controller along the lines that I probably didn't deserve, but I had a great boss who gave me that opportunity, and that's what really set the stage for my future career in the insurance industry. So it was not by design; it was out of necessity, but an industry that has been tremendous to me professionally and personally. And I think it's undervalued, underestimated. It seems like a boring industry, and it's not that. So I'm
Yeah,
glad
I
that
know. We change lives
that's
every
right.
single
That's
day.
right. Yeah. So anyways, it was by luck, and it was a good thing to happen to me.
So tell me a little bit about Scilac. You were involved with the early days.
Yeah. So, prior to joining Scilac, I worked for a company called Sentinel Security Life. And when I joined Sentinel in 2005, I had 12 employees and it was selling final expense. And I was hired to try to figure out a way to grow the company because they were losing more policyholders than they were gaining every year. And so, since it was such a small company, I had the opportunity to I already had the finance side, the statutory accounting side down, working with at Educators Mutual in the finance accounting area. So joining Sentinel in 2005 was an opportunity to work in all other areas of insurance company and have hands-on experience in developing new products, Medicare supplement, hospital indemnity, most importantly, annuities. And so when I left in 2018 to join Scilac, Sentinel had gone from 12 employees to close to 300 and had
Wow.
grown tremendously. So I met the CEO, our current CEO, Steve Hilbert, the CEO of Scilac, in 2016, just by chance at an industry event. And in 2017, he acquired a company in Salt Lake City that was just down the street from Sentinel's headquarters called Equitable. And when he acquired Equitable in 2017, he'd come to Salt Lake City and we'd get together every once in a while. And so fast forward, 2018, I called Steve and just said, "Look, if you're ever looking for somebody or there's an opportunity, I'd love to join your team." And what I meant by that is, Steve Hilbert was formerly formed Conseco, right? So one of the
Mhm.
largest insurance companies in the country. There's a storied history there, but for me, it was an opportunity to learn from one of the greatest CEOs, our industry has seen or has. And so, but it was also an opportunity. So he acquired Equitable in 2017, which is now Scilac. We went through a rebranding. And at the time, Equitable was not in the annuity space. It was in long-term care, Medicare supplement, traditional kind of senior market products. And so, my directive was to eventually close down all those other product lines and get Scilac into the annuity space. And so for me, it was an opportunity to maybe, you know, uh, get to build a second annuity carrier or be part of building a second annuity carrier. Sentinel was my first, Scilac being the second. And it's kind of a rare opportunity in your career, maybe to do things differently, right? That you wish you would have
Yeah.
done to start with. So so it was a unique opportunity. One, working with Steve Hilbert, but two, getting to help another carrier in the annuity space. So that's kind of the story. So I joined Scilac in June 1st of 2018. And that's really where I would say you said, Paul, when you kicked us off, that Scilac Equitable has a long history. I think it's over 87 years in business, but really when I talk to our associates or producers around the country, 2018 is our starting point, because that's really when
When it
our
really
annuity
kicked it
junior
off.
started. Yeah, so you kind of have to, we're still, I would say, in our startup phase. Our goal is to really kind of change the industry for the better in our own way. And so that's what we've been doing since 2018.
So what kind of ways are you trying to change it for a better way?
Yeah, so early on, had the opportunity to hire some great people that I've known for a long time and worked with. One being Carrie Freeberg, who heads up our product development department and also works with our marketing team with me. But I think, looking at products, right? One of the things, our challenges facing our industry is complexity of the annuities and getting the story out there. There's a lot of misperceptions, but our products are complex by design, I guess, just given their nature. So we don't need to make them any more complex. So our goal from the start was, let's make these products as simple as possible, right? And easier for the producer to understand and sell, and easier for the consumer to understand. And so that's been one of our, I think, one positive things of Scilac coming in the industry is, let's go back to the basics of what a fixed index annuity does, right? And that's safe accumulation, lifetime income with principal protection, no loss of principal, right? So and sometimes a loss of principal comes in the form of fees. And so that's another thing we're doing, or have been able to do at Scilac, is roll out some very competitive fixed index annuities, but we do not charge the consumer any fees. And what that does is, even so, let's say we have a year where the S&P is down, and we know with an FIA, the consumer is not going to lose any principal. But when the advisor has to sit down with that consumer and say, well, good news, you didn't lose any principal, but you actually did lose 1 to 2% in the form of fees,
Yeah.
it doesn't leave a good taste in anybody's mouth. And so that's why it's our goal, for as long as we can, not to have any fees the consumer pays, so that the producer can sit with their client and absolutely say to them, you didn't lose any money this year, even though the markets were down. And that includes, we didn't take out any fees, because sometimes a 0 year is a win, right? When maybe the markets are down 20+%. The other area, Paul, and I'm good at long answers,
Okay.
is education, right? Not only for advisors, right? But I just finished a call with a young advisor that does business with Scilac, who is really good at teaching agents how to sell annuities, or to sell a different type of annuity. Early in my career, I used to think it was the big carriers doing that, but I've come to learn there's really nobody teaching carrier-wise. There's nobody teaching agents how to sell and keep it simple, right? Just how to sell our products, but then educating the market in general, what annuity is, and doing our best to break down the misperceptions out there about annuities. There's plenty of financial advisors who like to talk negatively about annuities. But as an industry, I think we can do a lot more to talk positively about our products and what they do, because, as there's no other product in the market like an FIA that offers some upside, some growth, lifetime income, and zero downside risk.
Yeah, there's so many advantages to an annuity. What can we do as an industry to do better?
I think there's a lot of positive things going. If you look at like the Alliance for Lifetime Income, that carriers have partnered together, that I wish I honestly was a part of, or a bigger part of. I think initiatives like that, where the industry is coming together and working together to promote our products and what they do, not a particular carrier's product, just in general, right? Like take, our carrier hats off, set our egos aside, and work together collectively to educate the world about these products and what they do, our country, which doesn't, also includes not just the consumers buying our products, but um, advisors, financial advisors, future agents who should know more about our industry, what it does, and that it's not an old and boring industry, if you will. That's kind of I think a perception out there with a lot of college students that I at least talk to is, start with them, right? That there's a lot this industry offers, and let's work to educate our future sales force. So I think there's a lot of trade organizations that I personally am part of. NAFA, National,
Hmm.
is an organization that does a lot of good things, not only working to protect our industry, if you will, from undue regulation and
Yeah.
other advocacy fronts, but to get the word out about these products and what they do. And so that's something we're doing at Scilac, is trying to be a part of more associations focused on our industry, and again, focusing on education and breaking down misperceptions.
So index annuities are coming off like it's like 4 consecutive years of record growth. Our markets are changing. We have new administration in. Where do you see the market over the next year to 2 years?
Yeah, that's a great question. Our industry has seen tremendous growth, but I think I don't know how much of that growth is truly organic and new growth, right? I think just given the fact that we're coming off a period of very low interest rates, and products were sold that at the time had great rates, but today are low. And so there's a lot of replacement going on in our industry, which is great
Hmm.
because it's allowing consumers to move into products with more current rates, much higher rates, so better opportunity to accumulate more wealth and potentially higher lifetime income. However, it's also a downside in my mind, because that means folks are leaving contracts early, which is not always a good thing from a carrier perspective. So I would love to see more organic growth. So new, back to those initiatives, and seeing first time annuity buyers grow. I think if that was up 300%, that would be tremendously positive for our industry. So I think as the replacement business begins to die down, there's less opportunities to move consumers into higher rates. Um, I think overall we'll probably see sales come down within the next year slightly. But I don't view that as necessarily negative, because if we can continue to focus on first time annuity buyers and increase that number, I think that would overall be a positive. Fewer replacement business isn't necessarily a negative thing in my mind.
Yeah, I totally agree with it. As an industry, we need to do better at communicating the pure benefits,
That's right.
not in getting into nuances and whatnot. I think we would have more organic money, and I do think that's a problem in the industry.
Yeah, I agree. But there's some interesting things that I think have occurred. There's been a lot of news, obviously, since 2016 and even before that, with the Department of Labor and various rulings. But I think one thing that has come out of the various conversations or potential regulation from the Department of Labor is it has raised awareness of our products. So I think we're seeing more uh, uh, financial advisors, for example. So, producers who hold more than an insurance license, really becoming to understand the importance of our products and what they do. And I think that's a positive for the industry, right? Scilac operates in the independent agent channel, which is made up of both insurance producers, but those who hold various securities licenses. And I think the more um, traditional financial advisors, if you will, that are marketing our products, the better it is for our industry in general. Because it's, again, just another avenue of raising awareness of what fixed index annuities and other annuities can do for a consumer, and that they shouldn't be the only thing in a consumer's portfolio, but there definitely is a place in every consumer's portfolio, in my mind, for a fixed index annuity or other annuity. And I think that's another area of growth for our industry is traditionally, or at least at Scilac, I think our average age is 69 years old of somebody who's buying one of our annuity products. And that's probably pretty consistent across the industry. But in my mind, there's no reason why somebody in their 40s isn't buying our products more. They may not have, you know, uh, you know, 100,000 or more to put into an annuity, but there's no reason they can't start smaller and have a safer component within their portfolio. But I think, as an industry, at least at Scilac, traditionally we haven't marketed to that younger generation, but that's something that we plan to change. And we're trying to come up with some annuity products specifically that are tailored more for a younger generation, a generation that is needs to contribute more versus move a large balance over into an annuity. So allowing more flexibility with how what kind of premium, how often it comes in, and the amount of the premium.
What are some of the features that would be, great to offer to somebody to get that buying age down?
Yeah, I've talked with some individuals looking to help with that, and I think technology is a key, right? So I don't think, at least in my mind, annuities are not bought, they're sold, right? There's a very important, the advisors, producers play a very important role in educating the consumer on our products and what they do. They are complex. So I don't really see a direct-to-consumer model. I know there's carriers out there doing it, and I think with certain annuities that might make sense. But for a younger generation, I think there is an opportunity using technology, right? If you think about how many people in this country today don't have a traditional job, right? They're driving for Lyft, they're driving for Uber. So they don't have a 401k, they don't have traditional retirement like a lot of employees do. Well, annuities, I think if we could come up with a way where the minimum amount was zero, essentially, they can contribute $20 a week, and through an online platform, I think that'll go a long ways in attracting a younger generation and a different workforce, in today's environment with, whether you call it the gig economy or there's just a lot of 1099 employees in this country.
Yes, there are.
That don't have access to a retirement plan of any kind. And I think an annuity could be a step in the right direction for them if we can make it flexible enough and cost effective for the carrier. And I think technology is where we can do that.
So, how do you see MIGAs performing in the upcoming year? I mean, now might be the best time to get them.
Yeah, I think there's two things happening in the MIGA space, and this is my view, Paul. I could be wrong. As you know, MIGAs, I'll call them a commodity, right? It's highest rate typically wins. There's not a lot of bells and whistles with a MIGA, and that's the beauty of them. They're very simple, but because of that, they are somewhat of a commodity. So it comes down to rate and what you're paying the advisor. And so I think there's two things that play with MIGA rates. They're at very attractive levels. They have been for the last couple of years, primarily because of how fast yields have risen, which is allowing a carrier to pass on higher rates. But I think given the replacement business that's happening, some carriers have a lot of business going out the door, right? It's moving to other carriers. And so the MIGA is a way to generate positive cash flow. So we're competing with higher yields, but also a need to generate positive cash flow, which all bodes well for the consumer. To your point, right? There's much higher MIGA rates out there today. We're just transitioning a new administration. So I think there was consensus that yields or interest rates may have come down by now. I don't know if that's likely to happen at this point. 10-year treasuries are over 4.5%. So I see MIGA rates staying very strong for this year, at least so far, which again is a positive for consumers and for the advisors selling them. As long as we can compete with CD rates, the other advantages of a MIGA, should make it a pretty easy decision for consumers to go with a MIGA versus a CD, such as the tax deferred status.
Yeah, the tax deferred makes a world of a difference.
Yeah.
So, what are the biggest challenges you guys are facing as a company to compete in this competitive annuity space?
Yeah, it's as competitive as I've ever seen it, as you know, and not only with some carriers that have been in this space, for a long time, a lot of new entrants. You know, every year or every month, it seems like there's a new competitor coming out. Um, and for us, we've been able to compete. As you said, we started in 2018. 2018, our sales were all MIGA. In the second half of the year is when they started. And our sales in 2018 were 150 million, just over 150 million. The following year in 2019, we went to 1.7 billion of
Wow.
sales, and we've grown ever since. Um, by design, though, a couple of years ago, we did kind of lower our rates, become less competitive as we were going through some capital raises. So we became less competitive, just to slightly slow sales as we were raising capital, and with the goal of improving our ratios and ultimately improving our rating from AM Best. So I think even though we're a new entrant, we're a small carrier, we've been able to compete very successfully and became a top 10 annuity carrier relatively quickly. I think today we're in the top 15 based on sales, even though that's not what we focus on, right? We could be number one or we could be number 15. It's great to show where you're at, but really for us, it's focusing on the right level of sales based on our capital. Our biggest challenge right now, though, to answer your question specifically, is really ratings, and specifically AM Best. Given some changes they've made over the last couple of years, um, it's made it challenging for a company like Scilac, who does rely on reinsurance. We have very strong reinsurance partners, but based on the changes AM Best has made, it's impacted our rating. And there's a role AM Best plays in this industry. They have a view, but it's one view. And what we're trying to help educate specifically agents on, producers on in our space is, there's a lot to look at when evaluating an insurance company. AM Best is one tool, but should not be the only tool they use. There's five or six other large um, rating agencies that have different views, and it's not our job to tell a rating agency their view is wrong. We accept their view, but what we're trying to do is obtain more ratings from companies like Fitch, from KBRA, which are nationally recognized, and very stringent processes that they go through, like AM Best, but they have other views. And so I think it's important that producers weigh all of the ratings that a carrier has. And, by speaking directly with the carrier, with their management team, becoming comfortable with their financials and what their business model is. And so that's something we try to do at Scilac is, give our producers access to the CEO down, right? Because they're really the face of Scilac, if you will, Paul, meaning they're at the kitchen counter or the office
Yeah.
desk selling our products, not myself, right? So it's the producer that is really, when a consumer buys a Scilac annuity, they're thinking of the producer who sold them that annuity, not Dan Acker, right? So it's important that producers are comfortable with our model, who we are as people, and what our outlook is. And so short answer to your question, rating agencies right now are a challenge, and that's something we're working through. And part of the education process that I personally am trying to help with is, one, rating agency shouldn't be, what an agent focuses on when evaluating a carrier.
Yeah, I don't disagree with you because I mean, there's been A+ rated companies that have failed by them.
Unfortunately, that's right. Yep. And I think there's been more A-rated carriers fail than, what we would call a B or a lower rated carrier. But and I think that's where there's in a way, I think AM Best, and I'm not, again, it's not our job to tell AM Best what they should do. They're one of many. We're going to follow their rules, right? It's we're not going to assume to try to change their process, because that doesn't feel appropriate. Um, but it definitely, they shouldn't be another regulator, right? We already have 50 regulators plus DC, which is a good thing, but in no way should a rating agency undermine an insurance department. We're already put through very stringent financial tests, examinations, et cetera. But I don't think producers have access to what the state process looks like, regulatory process, and just how strong it is. Starting with a very stringent risk-based capital report, and then even adding more layers of charges, et cetera, it doesn't seem to be very productive, in my mind.
How do you see technology affecting distribution?
I positively, Scilac is a kind of a new entrant, if you will, with a long history, but a new entrant. I'd say we're behind the eight ball. There's a lot we can do with technology, and we're trying to catch up quickly. But as an industry, I also think we're traditionally not known to be technology, leading kind of the front end of technology. But I think there's a tremendous opportunity. Like I said, I've already talked about direct to consumer. I think there may be a path there for certain products, but that's going to be a challenge. I think using technology to partner with our producers, through that education process, helping them get in front of more consumers, using technology to help demystify our products, to educate consumers on our products is where we're focusing at Scilac. Whether that's videos, other technology components that to get in the hands of our producers, including the sales process, right? When you think about, we've had electronic apps out there for a while that make the sales process more efficient, easier. At Scilac, about 70% of every annuity sold is on an electronic platform through Hexures, who we've partnered with in their Firelight e-app. But I think, besides focusing on products, at Scilac, we're trying to figure out, put ourselves in the shoe of the producer at that point of sale. How can we make it easier? An example would be that one of the common questions that we get is, besides teach me how to sell your annuities, teach me how to sell your products, but teach me how to allocate across various indices. And so not only are our products complex and when you explain them, but there's over 100 custom indices in our industry that carriers work with outside of the S&P. And I think that's a challenge. It's one positive, right? Because we have some very bright people from various banks focused on our industry. And there's some great indices out there. But the flip side of that is I think there's work we can do at Scilac and in our industry to make that process simpler. How do I pick out of between 100 different indices that are available? And so that's one area where we're working with some technology companies to help with that process. Because, as a carrier, we feel there should be a little bit of hands off in terms of telling a producer specifically how to allocate. Like there's some companies out there in a much better position than we are to meet those needs. So I think technology for us at Scilac is coming up with ways to help the producer at the point of sale.
How do you see the future of Scilac? Do you plan on adding more product lines, new indices? What's new and exciting on the front for you guys?
Yeah. So, our goal it's not a formal goal, but really our goal is to have every quarter to have something that allows, or that the producers, marketers can talk about Scilac, whether that's a new product, a new indice, a new tool. So this year, what we have planned is we just signed a deal with Bloomberg and RBC to launch a new index that'll be coming out this April or May, and that partnership will be formally announced here any day now. But we're very excited about the partnership with Bloomberg and RBC. We're also working with another bank to not add another index, but index with crediting strategies. So strategies that put a little more control in the hands of the consumer in terms of when they can lock in a rate or a return throughout the year versus on their anniversary. We also plan to launch a new fixed index annuity this July or August. That'll be a guaranteed. It's going to be an FIA focused on guaranteed income account growth, leading to our goal is to be in the top 5 in terms of annual income that would provide to a consumer. So a very competitive guaranteed income FIA. And then the other major initiative is we just signed a partnership with Index Standard. And it gets back to what I was just mentioning. Index Standard is a tremendous organization with some very bright people that they're putting together almost like a Morningstar report of the various indices that carriers are offer. So for Scilac, our partnership is going to put in the hands of our top producers an allocation report. So we're helping to answer that question of teach me how to allocate. And by partnering with the Index Standard, we think we're going to be one of the first carriers that's actually adding this as a value-added service, if you will, Paul, to where these reports can be accessed via our website. And producers who are consistently writing with us, it'll be free of charge to them, and we're paying the fees for the Index Standard, which out of all the things I've just talked about, I think that's the one I'm really excited about. Besides the opportunities we have with Bloomberg and their marketing team, I think showing producers that we are a producer-friendly company. We try to put ourselves in their shoes at that point of sale and what we could do better as a carrier to partner with them and to make things simpler for them, and to listen to them. Show that we do listen to the producer. They've asked to show them how to allocate. Well, we're not going to show them. We're going to partner with somebody who we believe can do that better through the Index Standard.
Nice. You guys also have an AI index, right?
We do. And that's an index, Raven Pack, which is a fantastic company. They're located in Spain, but also in New York City. But we launched that index. Time flies. About three years ago, roughly, and it's been a very successful index for us. And there's ideas in the works to expand on that AI index, and some very cool tools that Raven Pack has come up with that we also hope to roll out to our producers as another value-added service.
How has AI impacted Scilac, if at all?
Great question. It's something personally I'm behind the gun on, but we have a team at Scilac that is responsible for developing the AI initiatives within Scilac. So we have we've been spending the last year kind of testing different ways AI can help us, primarily through our customer service team and internally. And so now we're rolling that out to all 325 associates we have, to streamline really as much as we can, whether it's drafting emails, reading through emails to just get to the point of the email and save time. So AI, will be used in a bigger way going forward for Scilac, mostly internally for our associates. As this initiative progresses, I think it'll then shift to how we can help the producer partner with the producer, to leverage any partnerships we have on the AI front to help them again with that point of sale process. I don't see it. It's an exciting opportunity, but scary opportunity at the same time. And just the power of AI. So I think there's ways to help us through suitability, right? One of my goals is when you think about suitability, we don't need to have our associates focused on cases that are pretty straightforward, clearly meet our standards. So I think there's a way AI can help us there so that the individuals that we have in our suitability team can focus on the complex tasks, right? And I think that's probably in general one of the biggest benefits we'll see is, let's automate the simple things and allow our folks to use their brain and common sense for the more complex kind of gray areas, if you will. Because that's one thing we try to tout at Scilac. It's easy to just write rules, yes or no, but very few things fit right in that yes or no category. So finding associates that, with the right guardrails, if you will, Paul, can use their brain, use their common sense, and make the best decision for the consumer and the producer. Even though it may not fit within a strict set of rules, it still makes sense. It's viable. And so it's something we try to work very hard on at Scilac, is giving people, hiring the best people we can, giving them the tools they need, but letting them use common sense in our daily practice.
Mhm. So, Dan, we've covered a lot in this interview. One of my other favorite questions to ask is, are there any questions that I didn't ask that I should have?
Well, that's a great question. I look, I don't think so, Paul. I think this has been a great interview, and I think what I hope to accomplish the most in this coming year, besides the things I talked about at Scilac and our initiatives and products and index standard, all these partnerships, is helping this industry understand the value of rating agencies and other rating agencies, and there's more than one. And I mean this in all positive intent here. This is not in any way to be derogatory. So I think the question I'd ask is, how as an industry can we come together to help explain what roles other rating agencies have? If you look at most of our top carriers in this industry, Athene, F&G, American Equity, right? The list goes on. Most of them have more than one rating from various rating agencies, and there's a reason for that. It's not just because they may offer securities, and so there's a rating agency for that. It's that competition is a good thing. Different points of view are a good thing, and how can we as an industry educate the agent base out there, the producers, on the value and how to truly evaluate a carrier. So the value of other opinions of other rating agencies as a tool to evaluate a carrier and their future performance.
Do you think agents do enough of that, looking at the ratings and at behind?
I don't think so, but I don't think again, I'm trying to strike a balance of not speaking too broadly here, because I don't want to talk negatively of any competitor. So from a Scilac point of view, no, we haven't done a good enough job helping the consumer, helping producers know, what tools states use to evaluate, right? Just how strict statutory accounting is to start with. There's a reason, even though carriers have failed, regardless of rating, I'm not aware of a consumer ever losing money buying an annuity because of the safeguards in place. One, states coming in soon enough when a carrier is in trouble. Two, the fact that other carriers kick in right when there's a failure, and it's a very important thing, and a very important a fact that you're not going to lose money buying an annuity. And so I think there's ways we can make it simpler for producers to evaluate a company, versus just saying, okay, what's your AM Best rating, and that's what I'm going to base my decision on.
Mm-hmm.
Right. But with that said, statutory accounting is not simple. And so we're trying to figure out a way to simplify that evaluation process for producers, because we have a role to play as well. We can't just put it, in their court and say, figure it out, producers. That we have a role to play here in partnering with them. So I think there's more we can do, should do. If we were A-rated, would I be talking about this as much? Probably not. But I should be, and A-rated carriers should be as well, right? Because rules can change overnight and impact any of us, right? And so I think it's a very important initiative that we at Scilac have, and one of the most important things we're working on right now.
Well, I hope we can help you communicate that.
Yeah, I'm counting on you, Paul. So,
Dan, once again, it's always a pleasure to speak to you. Thank you for your time, and we will be in touch shortly.
All right. Thank you, Paul. It's great to see you as always, and look forward to talking with you more. Have a great day.
Absolutely.